Welcome back. You're still watching Business Morning on Channels Television, and right now we'll start our conversation on the program, and we'll be reviewing the Lagos Chamber of Commerce and Industry's 2014 Economic and Business Report, which they actually put forward very recently. Yesterday, we've got that report from them, and I'm being joined on the program by the Director General of the Lagos Chamber of Commerce and Industry, Muda Yusuf. Thank you so much for joining us this morning.
Thank you very much. It's a pleasure.
Well, let's look at that report. It's quite encouraging that LCCI feels the way they do, at least looking at those numbers. But most people are quite skeptical, especially since this year is a pre-election year. The report shows that the resilience of the economy, despite that, will endure. Why the optimism?
Well, the Nigerian economy is reputed for its resilience. You know, over the years, you will see that we have gone through very difficult times. And in spite of all of that, we see that the figures that come out, particularly with regard to some key indicators, you know, because when we are looking at the economy, there are many perspectives to it. There are the perspectives of the key economic indicators. There are the perspectives of the business environment and investment climate variables, and also the perspectives of the welfare of the people. You know, so depending on what perspective you are looking at, but if you are looking at the key economic or macro indicators, generally the economy has been resilient. Resilient because for as long as the economy remains so dependent on oil, and for as long as the performance of the oil sector is not as bad, oil prices are still fairly good, oil output, although we had challenges, are still not too bad. For as long as that is happening, there will be chances of regular injection of some form of liquidity into the system. And again, don't forget that the Nigerian economy is characterized by a population of very enterprising people. Nigerians are very enterprising, they are very creative. So even in the midst of all of these challenges, there will always be opportunities that people tap into.
Okay, now
some of the challenges actually turn out to be opportunities for a lot of people. I mean, if the school system is collapsing, people are setting up private schools. If the power system is collapsing, people are doing good business with diesel and generators.
Well, Muda, let's focus on, we have a particular slide right now on our screen, and that's focusing on the domestic economy. Now, from what we see, the organized private sector, LCCI, is actually expecting that GDP growth will remain strong at over 6% relative to a global average of 3.1%. What does that actually mean for the economy, and what's the
what it means is, again, just to underscore the resilience of the economy and the prospects that the economy has. Some of these figures are figures that have been generated through some process of research. These are projections from the IMF. And to some extent, I think even the National Bureau of Statistics give this kind of, this optimistic projection. But generally, if you look at the growth drivers, the telecom sector is a robust sector any day, because of the kind of products and the kind of markets that they are in. In the past couple of years, it has been the fastest growing sector. The hotel and restaurants, or hotel and tourism sector, is also a very good sector. The distributive street sector has not been doing badly. The financial services sector, building and construction, these sectors are sectors that are driving growth. Even though their impact may not be so immense, so significant, because when you relate it, and you relate the number of people operating in this sector, people benefiting from these sectors, compared to the larger population in the economy.
It's funny that you should mention that.
They are so small.
Yeah, it's funny that you should mention that.
That is where the issue is.
Yeah, because I just got a tweet from one of our viewers, Sani Ozove. He says 63% of Nigerians living below $1 daily, with a GDP growth rate of 6.5% annually. Who's benefiting from this growth?
Yeah, that is the issue. Even the finance minister recently alluded to this point, that of course we have growth, but very small percentage of the population is benefiting from this growth. You know, and you can look at that based on the sectors that are actually generating the growth. If you see an average telecoms employee, particularly those in mobile telecommunication companies, they are not doing badly. If you see an average banker, they don't do badly. You know, or somebody in oil and gas, upstream, downstream, they're not doing badly.
Now you mentioned
these sectors are doing well.
These
but the percentage of people that are in these sectors are so small.
Now let's talk about a sector that has a whole lot of people, but we're not seeing the LCCI didn't comment so much about it, and that's the agricultural sector.
Yes.
So is it that what the federal government is doing at the moment towards revitalizing the sector doesn't mean so much to LCCI, to the extent that they'll give it the kind of attention, you know, that they've given these other sectors like the telecom, building and construction, and hotel and restaurants and solid minerals, because you've identified them as major drivers of growth and it is expected to be sustained. So how about agriculture?
You see, there is a distinction between drivers of growth and sectors that make up the GDP. You see, in terms of components of the GDP, these sectors don't contribute much. Telecoms is contributing just maybe about 5% of GDP. Hotel and restaurant is contributing just about maybe 1% of GDP. Oil and gas sector is contributing close to 15%.
But agriculture is contributing over 40%.
Agriculture is contributing over 40%. Now, in terms of growth, because of all the challenges, particularly in the northern part of the country, security challenges, growth in agricultural sector has not been that fantastic in the last couple of years. You know, a lot of agricultural activity take place in the north. That has affected the growth performance of the agricultural sector. Even though there has been a lot of reform, the transformation agenda and all of that. Then secondly, if you look at an average farmer, in terms of the quality of life, you will see that there is a sharp distinction between the so-called contribution to GDP and the quality of life of an average farmer. Because it is a sector that is still populated by rural farmers, up to about 95% or more. You don't have any strong presence of commercial farming in this country. You know, so there is still an issue of productivity in that sector.
But now that
an issue of trickle-down effects.
But now that the minister now that the minister has focused on agriculture as being a business venture,
yes,
it started at least for most part of last year. It's going to continue for this year. Will organized private sector's view on, you know, contribution from the agricultural sector change?
Well, it will change, but these things are yet to begin to manifest. Because the beauty of a policy is that if it is bottom up, what I can see with regard to the agricultural transformation agenda is that most of it are top down. You see, if a policy is bottom up, you have the benefit of actually effectively targeting the policy, so that you target the gaps and the needs of the people in that sector. You know, if you talk to an average farmer, of course, there have been talk about this e-wallet and all of that, you know, but not much is really happening on the ground. I mean, look at all the talk about the local rice and all of that. You go to market regularly. I also do occasionally. You hardly find the local rice anywhere. I hear there is so much hype about local rice, about, you know, all these things. We need to begin to bridge some of these gaps and begin to locate where the challenges are. And you can only locate the challenges if you talk, if you generate the policy from the bottom up. So that is when you can actually put your fingers on what the challenges are and be able to fix the challenges, so that you can bring up all these people, the operators in the sector.
Now, speaking about challenges, according to that report, the prosperity of a business would depend to a large extent on the capacity to manage risks. So what are the risk factors that LCCI is looking at?
Well, business is about risk. Doing business is about risk. And that is what makes an entrepreneur. First of all, the Nigerian business environment is a high-risk environment. If you don't have very good appetite for risk, you can't do business here. And the good news is that the returns and the risk correspond. That is why if you look at the foreign investors, database that we have, much of them are from Asia. And Asians have very big appetite for risk. They can take risk. That is why they populate the entire business space. So to do business, either as a foreign investor or as a domestic investor, you must be abreast of the risk variables that you are dealing with. And this risk could be systemic, it could be macro, that is, covering perhaps the entire sector or the entire economy. It could be sector specific, because there are some risks that are peculiar to certain sectors. It could also be company specific. There are risks that are peculiar to certain companies. So a proper understanding of this risk will minimize the chances of losing money, will minimize the chances, will improve the chances of operating business optimally.
Okay, let's take a look at some of those risks that we have now. We have inflation risk, we have corruption risk, security risk. I also saw at some point fiscal risk. Yes. Those were some of the risk outlook for 2014 that LCCI talks about. Could you just run us through some of them?
Well, if you talk of inflation risk has to do with the chances of keeping inflation low. What are the factors that could threaten the current fairly stable prices that we have? And the point we are making here is that it is not likely this year that inflation will continue to remain in single digits because of a number of factors. First, we are likely to see further depreciation of the naira because of all the pressures that we are seeing on the foreign exchange, because of this disparity between the parallel and the official rate, which has gone to a level that is almost unprecedented in the history of this country. We have an official rate of about 158 or 158.5, and we have a parallel market rate of about 170. At the time it got to 172.
73 too.
173, these are indicative of the kind of pressure that will come onto the market. It's also indicative of the kind of speculative pressures that these things will generate. It's also an indication of the possibility and the incentive that has been created for round-tripping of foreign exchange. Because if you are smart enough to move forex from the official market to the parallel market, even without doing much, you make a kill. Even though it is not a legitimate transaction, but there's a strong incentive to do those things.
Let's look at interest rate risk.
Also the issue of the energy costs, transportation and all. The interest rate risk will remain also high in the year, because generally this economy is a high interest rate economy. That has been like that for some time. And again, that has also is the kind of feature of our monetary policy. Interest rates, particularly for the SMEs and medium-level enterprises, has been ranging from 25 to 30%, sometimes to 35%. And for as long as that is in place, then there's a high risk with regard to interest rates. So if you have a business which is probably long-term, and you get into this kind of interest rate structure, you need the grace of God to be able to survive in that business. Okay,
and we're seeing the policy risk as well. Now, during the course of last year, the CBN came up with a number of monetary policies, including reverting back to the retail Dutch auction system from wholesale Dutch auction system, and then also the banning of the importation of dollars. Now, already you talked about how much there's so much difference between the parallel market and the official window. But going forward now, how much impact, positive or negative, do you think that some of those policies, like the reverting back to RDAS and the banning on the importation of dollars, among other policies, has had on the forex market?
Well, they have had a lot of impact on the forex market.
Positive or negative?
Well, I think I would say negative. Now, first of all, we look at policy risk from the point of view of monetary policy. First, one of the biggest shocker we had within that context was the moving up of the CRR from 12.5% to 50%. It was a major shock on the financial system. And if you had a bank that is too dependent, for instance, on public sector deposits, that was a big problem.
Which is what we saw, at least.
Yes. It led to a situation where even some of them, at some point, were not in clearing. You know, these are indications of what a policy risk can do, particularly if you are not prepared for it. You know, of course, we had the issue about the foreign exchange policy, which also came suddenly. Well, to some extent, it has been able to kind of stabilize the official window, but it has created a lot of problem in the parallel market. And the impact that is having, you know, it's already having some impact on prices, actually. Because we have a large informal sector. Many of them patronize the parallel market to fund their foreign exchange transactions. And this notion which the CBN had that, well, most of the activities in the parallel market are not exactly legitimate transactions, that notion is not correct. You know, informal sector has its own attributes. And it's also the creation of the kind of environment in which we are. Because if you have an informal sector, particularly many of them are in the small and micro enterprise segment anyway. You want to go to Kutoni, for instance, to buy things. You want to leave this night and come back tomorrow morning. Maybe they were just able to mobilize the fund even a day before. And sometimes some of these traders, they also pool resources together to go to either Kutoni or to go to China to do. They do this within a short space of time, which the normal bureaucracy of filling from going to the bank, going for bidding will not permit.
Well, just before we go on a quick break now to catch our breath, I just want to just, you know, take you up on this, because you see, most times when the Central Bank of Nigeria decides to take a stand on a particular policy, it doesn't do it independent of whatever happens in the environment. It takes into cognizance the variables at hand at that particular point in time before it decides that in the best interest for the economy, certain policies should be introduced. Because you're making it seem as if in taking this particular stance on reducing, on banning the importation of dollars, it seems as if it did not take into cognizance the market environment.
Well, the thing is that sometimes it does, sometimes it doesn't. But the thing is that the CBN also has its own narrow objective. The narrow objective is price stability.
And protecting the economy.
But sometimes in process of doing that, there are other costs, which sometimes the CBN does not reckon with. And one of it is the tight monetary policy regime that we had. Well, it has been able to bring down inflation. It has been able to stabilize maybe the foreign exchange market, but it has created a lot of problems with cost of funding for businesses.
Well, we're going to talk about that.
Which one
we'll come back to that.
A cost to this policy.
Definitely. But then you see, everything is always meant for the greater good. But we'll come back and continue this conversation. You're still watching Business Morning, the midweek edition of the program on Channels Television, and we're reviewing the Lagos Chamber of Commerce and Industries 2014 Economic and Business Outlook Report. We'll be right back.